Welcome back to Aspen Woods. We missed last week because Tillman is an absolute piker, and I don't know, had some sort of engagement that was meaningless, but we bowed out last week. But we're back, and we're back to talk about some seriously important stuff. We believe here at Arch Public, which is our firm, and at Aspen Woods podcast, that everyone should own Bitcoin. I don't care how much or how little, everyone should own Bitcoin. And that's going to be the focus of our show today. One, why you should own Bitcoin. And then, secondarily, how you can go about owning Bitcoin. So, what say you, Tillman Holloway?
I like your colorful microphone. It's distracting me from what you're even saying. It's changing colors. It's very high tech for what I know about you.
Isn't it something that earlier in the day I was a little bit low energy and things have just turned around?
Yeah, it is. It's amazing. Listen, put the guy on stage and he will do a tap
I'm
dance.
not
Is that right?
entirely sure how I've pulled that off, but I have.
I
Uh,
know how you that new cappuccino machine that you got. You got.
yeah, that thing, that thing has been working overtime here at the parish household. Overtime.
uh,
So listen, the truth of the matter is that at Arch Public we focus on algorithmic automated strategies. And we worked really hard to create some strategies that are Bitcoin focused and are biased to the long side, again because we believe people should own Bitcoin and as much of it as they can possibly stomach.
yeah. On a
So
serious note, to your question, you know, Bitcoin has been added very recently to Wall Street's um, bell of the ball list.
mhm.
The Larry Finks of the world are promoting it and believing in it to be kind of the global peg against fiat inflation, and because of that, it warrants exposure. Is the way that I would put it. But everybody should owning it owned part of it or pieces of it is another way to say that. But the bottom line is like any sound strategy in a financial system is based upon diversification. And it's, if you look at an asset that has a lot of upside potential and very little downside potential, as long as you stay well within balance in terms of your overall percentage of exposure, you can't miss. And so if you believe that things that are scarce against dollars that are not are going to go up over time, then you have to believe in Bitcoin appreciatory value and or potential. So I absolutely think that, like you said, Bitcoin should be a part of everybody's strategy, and you should have some exposure, even if it's 1% of your available, net worth. There should be some exposure there.
Well, serious people are looking for meaningful returns on their money. That doesn't mean, when I say serious people, I'm moving away from the world of meme coins into reality. It's one thing to think of a 10x, it's another thing to think of a 2 or a 3, or in Larry Fink's case, a 5 to 7x on Bitcoin. So most would assume that Larry Fink, the CEO and founder of BlackRock, is a serious guy. And he was at Davos and he was on, the business channels talking about Bitcoin going to 500, 600, 700,000 plus. That's a 5 to 7x on your money. That is an extraordinary number to talk about.
It's
It
unheard of on Wall
Yeah,
Street. Yeah.
it's unheard of on Wall Street. It's unheard of for the CEO of an asset manager, which is what BlackRock is, to go on TV and make the case that something that he's involved in is going to go significantly higher. I don't remember a time, and I've done a ton of research since he made that claim, where he's gone out and given a price prediction or even remotely close to a price prediction on an individual asset. It just doesn't
I
happen.
couldn't
So,
agree more.
it got some meaningful play in the world of crypto Twitter when he said it, when he did it. I put out a bunch of stuff on it. But at the same time, I still feel like it didn't get the attention that it should have. Like that's such a big deal. It's hard to quantify if you're somebody that owns Bitcoin or wants to own Bitcoin for the right reasons.
Well, I've said this before, and I think we grossly overestimate how many people are investors in this world.
Mhm.
I don't think normal people, don't think about where their money is invested. It's
Mhm.
just going out of their paycheck and going into their 401k, and it's being managed by some firm that's really, really, at arm's length, and they don't ever talk to. And so I just don't think that the buy-in, I don't think most people even know who Larry Fink is the
Right.
truth. He
Right.
means something to us because he's one of us now, but he doesn't mean much to the rest of the world or to the lay person specifically. And so what's more encouraging is that if it gives us an advantage, in my opinion, as to the length of time between what we know to be true, which is Bitcoin's getting integrated into the financial fabric of our society and a lot of other societies, and the reaction to the price, because those are systems that have to be integrated and put in place and turned on, and we're seeing just the dribbles of it right now compared to the full flow, when kind of this is mainstay, and every and registered investment advisor on the planet is by default including some allocation for every one of their customers in Bitcoin. Like, there will be a day where I think that is the standard. Right now, it's more of the early adopter phase, the people who have been waiting for the regulatory clarity, that have the head start to jump right in right now and get something going. I think we're just starting to see them respond. So we have a pretty good evolution of time that's gonna have to take place before everybody is getting integrated into Bitcoin, with or without their knowledge, to be honest with you.
So, Larry Fink being out there talking about 5 to 7x from current price levels, Bitcoin, he's just not talking to the interviewer at Davos because he just wants to have a good time and a giggle. He's not talking to people that work at BlackRock. He's talking to all of the customers that exist at BlackRock. And oh, by the way, they manage just under $12 trillion in assets. Okay. Now, understand this, and this is a little bit of the education here on this podcast. There is a big difference between managing assets and custodying assets. When you custody assets, you're not active, you're not charged with actively managing those assets so they produce a return. You're just legally holding those assets so they don't go places they're not supposed to go. So, for example, the Bank of New York Mellon, right, which is the biggest custodian on the planet, they custody 43 trillion in assets, but they don't manage that money. BlackRock is the largest manager of capital on the face of the earth at almost $12 trillion. All right. So when Larry Fink is saying that Bitcoin is going 5 to 7x where it is now, he's basically, as loud as he can shout it, saying to all of their current customers, put more money into our Bitcoin products. And if you're not a customer of ours, bring lots of money to BlackRock because we think we're going to 5 to 7x your money with our Bitcoin products. Again, that is an incredible statement, an incredible sales tactic. Um,
But he hasn't done it blindly. He's
right,
waited a full year
mhm,
of seeing the success of the
right,
existing product, and
right.
he's going, the demand is here for this. Like, he's ridden this bull before. He knows exactly what demand and supply looks like and how to best manage that. And the bigger this gets for BlackRock, they're managing so much inflow ETF demand,
Yeah.
and then let's say there's a lot of outflow.
Mhm.
I think they're going to start being the single largest broker for OTC deals, because that clearing that has to happen every day is going to it's a natural watering hole for big buyers and big sellers to just go sit around the trough, wait for the day's action, whichever side the action falls on. you've got piranhas essentially there waiting
Yeah.
to gobble it up. I think again, this is about transactions for these people. It's about being a bank of some sorts and having lots of products, loan based, yield based, all of the above, and having as many transactions taking place as humanly possible. Why? Because that makes them the market maker, not just market maker of one entity, one equity. It makes them the market maker of a new market, and that
Yeah.
market is digital assets, right? Being Bitcoin being the king of that.
So let's get right to it. Our firm, Arch Public, you can go there, archpublic.com, anytime. It's in my bio. It's in Tillman's bio as well. We create algorithmic product that people can use that generate returns. And we want to talk about our Bitcoin product today. And the reason why we want to talk about it is one, we've created some extraordinary strategies that allow you to stack Bitcoin in a meaningful way without you just hitting smash buy whenever you think it makes sense and being beholden to a price level no matter what happens. We think that's fool's gold, and generally speaking, that's the quickest way that people get shaken out of their Bitcoin position, is because they bought $10,000 at 101,000 and they get nervous. And what am I going to do? Could it drop another 60% like it did in 2022 or 80% in 2018? I don't know. Maybe I just shouldn't be in Bitcoin. Instead, there's a measured way to go about creating a Bitcoin position.
Well, there's a way in which you can be subject to the volatility,
Yep.
and there's a way in which you can harness the volatility, is the way I would put it. And so Bitcoin has a lot of volatility. Everybody knows that. But a lot of people, you could see that if you're burned on the side of volatility as a negative thing. But traders love volatility. Investors love volatility. Why? Because it gives you better price entries. The more a price moves, the more opportunities exist to get it on sale. It would be like, when's the last time you heard about Louis Vuitton putting on a sale?
Mm-hmm. Yeah.
They don't put on
Yeah.
sales.
Doesn't
No.
happen.
Yeah. So, when you get to a certain level, you don't put on sales. That's the S&P 500. It doesn't have sales.
Yeah.
The volatility is very little. But then when you get to a brand that's really hungry for market share, Lululemon, when they were growing, man, they were putting on massive sales all the time. Why? Because they knew their product was a desired product. They knew they could get it in the hands of a lot of people, and they needed to attract that market share through discount efforts. And so, we're seeing the same thing across the financial board right now. Is you're going to be incentivized to use all sorts of products. The bottom line, though, with Bitcoin is there is no right time to buy. That would be like me trying to get in shape by working out for 24 hours straight. It's much, much better to work out for 24 hours, 24 days, 1 hour a day. You get results when you pile up a disciplined approach, is the bottom line. And so algorithmic trading replaces the discipline needed to sit in front of a computer and make trades all day. And it replaces the discipline that you need to do the math required to know when you make the trades and when you don't make the trades. And all of that is time consuming, it's stressful, it's emotional. And algorithmic trading removes all of that burden and makes it a hands-off approach where you go through the process of inputting a few variables based upon what you want out of the algo. And when you're doing that in sober mind, when the market's not trading your money actively and you're way up or you're way down, it allows you to think clearly, and it allows you to say, okay, if these variables or if these parameters are met, then I want these trades to be executed. And when you're able to have the back testing right at your fingertips that our software gives you and that TradingView gives you, you're able to go into those strategies with a lot of confidence. And once you put it into motion, it's hands off. You just set it and forget it. And it's monitoring the markets 24 hours a day, 7 days a week. So when Bitcoin drops at midnight and you have a parameter in your algorithm that says if Bitcoin goes on sale by more than 7% in a 24-hour period, trigger this buy event. You could be totally sound asleep and be a buyer of Bitcoin right in the middle of the night based upon that parameter being met. So it allows you eyes and ears and an active manager for you on your behalf based upon the variables you've chosen to be monitoring the markets and acting on your behalf 24 hours a day, 7 days a week. There's nothing like it. And once you see it, you believe in it. And that's why giving the product away for free at kind of what we would call the retail or the beginner level, it allows everybody to see the feature set, play with the product, and get a lot of confidence that it's something that they find value in using going forward.
So here's the thing. You said a lot after you described your what you know about Lululemon. And so it was difficult for me to follow much of that after thinking about you in yoga pants. I've got to be honest.
Do you want me to show you what pants I
No,
have
I
on
don't. I
here?
don't. I don't. Not right now. That would be difficult for our
So you're
brand.
insinuating you want me to show you later? That's even
Yeah, well,
worse.
that's probably worse. Yeah, that's worse. That's worse. But yeah, so what we're going to do here is a couple of things. We're going to walk through our Bitcoin algorithm and the arbitrage strategy. But I want everybody that's listening and watching to know that this product is available for free. So we put our money where our mouth is, right? So we want everybody to own Bitcoin. Everybody should own Bitcoin. We believe that as individuals and as a firm. And so we've made this product free to everyone. And you're going to find as we walk through this, because it is an automated strategy and it's algorithmic, you can't pull this off by sitting at your computer and punching on numbers for 24 hours a day on Coinbase Pro or whatever it happens to be. This is automated stuff. And so we obviously are impressed with our work, but at the same time, we want to get it in your hands, and we want you to use it. We want you to benefit from it. And so we're willing to give it away for free. So let's start with that. Alan, if you can go ahead and pull up that first slide so we can begin walking through what it is that we do.
Yeah, so let me start by saying, when you open up the software, you're opening it up inside a TradingView, which is a third-party software that has a tremendous amount of market data at your fingertips. So what you can do is you can put varying parameters into the software, and you can pull reports over whatever period of time that you want to pull the report over.
Mm-hmm.
So you can pull the report over a 1-year period, 6-month period, 5-year period, the entire history of Bitcoin, 16 years. And so what we've done is we've pulled a lot of reports and found what we believe to be a very unique product. And what that is kind of, it's not a true arbitrage play, but what I call it is a trigger event play. And what it allows you to do is say, okay, if Bitcoin moves by this percentage up, sell this number of dollars of Bitcoin.
Mm-hmm.
And if Bitcoin moves down by this percentage, then buy this dollars amount of Bitcoin. And you can define what period of time that you're looking for that percentage to change, a day, a week, a month, whatever. But what we've found as kind of our default template case study, if you will, is something that is about, it's roughly 2% move, 2-point-something% move to the upside, and it's buying over or to the downside, it's buying $500 plus of Bitcoin. Mm-hmm. And then if you move, if the price goes up by 2-point-something%, then it's going to sell about $260 of Bitcoin. So what you see in that is you're seeing that you're buying twice as much as you're selling, right?
Mm-hmm.
And you're doing it at roughly the same movement, at about 2% movement. And so with those parameters, you get an effect where essentially, let's say the algorithm takes a trade, and let's say for just math purposes, that trade, Bitcoin's at $100,000, okay? Mm-hmm. And let's say the next trigger event should be exiting that position. But because the price has moved against us, let's say the price moves to 97,000. Well, we're not going to sell that at a loss. Why? Well, because we believe that Bitcoin is an asset that's going to go up over time. So what the algorithm will do is it just won't sell out of that position. You're going to hold that position, and you're going to hold that position for longer term until there's a real price movement that goes up above that you can exit out of. But what it will do is let's say that price moves up. Let's say you got it, the algorithm got in at 100,000, and the price moves up to 0.5%, and it triggers the exit because you've made profit. You're making cash flow on the positive trades that you're making in Bitcoin, and you're holding the negative trades for long-term accumulation of Bitcoin. So you get this healthy balance and this mixture of making profits in cash on the trading of the positive trades during the trending channels of the price action. And then at the same time, you're accumulating Bitcoin with these variables. And so what you get at the end is you get over a 7-year period, about a 20% cash on cash return on that money. What I mean by that is if you starting balance of this case study was $100,000 in cash, and it was 7 years ago. So over that 7-year period, it's accumulated $140,605 of cash. So roughly $20,000 a year cash on cash, i.e., 20% of your original $100,000 investment. So it's a great return just on a cash basis. But then because you're taking positions in Bitcoin that aren't selling, you're accumulating over that time period 18 plus Bitcoin. And that 18 Bitcoin accumulated over that time period gave you a net profit of the accumulated Bitcoin of over $1.8 million. So with 100 grand in cash starting balance, you're able to essentially make over $2 million in that 7-year period. And if you believe Bitcoin's going to continue to move at this clip going up, it's safe to say that essentially you would be betting on this history repeating itself, and that's essentially what our premise is that we do think that Bitcoin's going to have upward price and movement that's going to average out to be at least what it has been over the last 5 years, 7 years, and that's about a 40% year-on-year return. And if you want to take advantage of that, the questions you have to be asking yourself is when do I enter and how do I buy? And this software makes it very easy to do that, makes it very approachable to do that. And you're able to see the results in real time. There'll be daily, weekly activity that you can follow along with and really gain confidence in as it moves forward. And one of the interesting things to talk about during this 7-year period is the largest drawdown in capital against your initial 100,000 is over 80%. Like if you had a buy and hold strategy and said, you know what, I'm just going to ride the waves of Bitcoin's price action, you would have at one point been down 80%. That's $80,000 of your original 100,000. If you were playing this arbitrage or this strategy and you had made the 140, you've made more in cash than your deepest drawdown in principal balance. And so it's a way to mitigate the risk of drawdowns because you're scraping money or cash off the table. Now you could press that cash back into more Bitcoin, and that would be a way to essentially accumulate more Bitcoin, is on the profits of the cash benefits that you've got. But it's a very, very unique tool that allows you ultimate customization in putting the inputs in that you want. And we'd love to, again, let you play with it for free, get on the phone with you, get on a Zoom call and show you how to use it so that you can come up with the kind of the magic recipe for your own needs.
If you want to go to the next slide, Alan, let's go ahead and do that, and then push to the next one as well.
So we have a question in the text that says, "Why did you choose TradeStation?" This algorithm doesn't operate on TradeStation; it operates on Gemini. So you would need to open up a Gemini account to run the crypto side of our automation. We chose TradeStation for the future side because TradeStation has built their entire platform to accept trading automation or code very easily. They've built it on a custom set of code called ELD, or Easy Language Document, and that makes it very compatible. Whereas most of the other platforms, not all of them, but most of the other platforms, inputting your own strategies in the form of automation isn't a native feature set that
Yes,
they have
API
built in.
based. Yeah.
Yeah, well, it's either API based or it's you're having to do custom software sets is the bottom line.
So taking a look at this slide, it's it's a little smaller, but it what it does show again is the way you're taking a look at a chart there, and you may have to zoom in a little bit, but you've got pink arrows and blue arrows, and those pink and blue arrows are showing you over like about the last 9 months of price movement on Bitcoin, what the algorithm is doing at 1 in the afternoon or 3 in the morning or 5:30 in the morning, depending on the movements in Bitcoin. And so the point is that the algorithm is making decisions on your behalf with zero emotion. There's no emotion here. There's simply math, right? And the math over periods of time are simply going to end up with better outcomes. We have a question here. I'm going to go ahead and pop it up. Why the switch to make it free? Well, we talked about the fact that we think everybody should own Bitcoin, and we want everybody to feel the power of automation, algorithmic automation. Understand this: nearly 80% of all trades that happen across the globe, all the exchanges, New York Stock Exchange, NASDAQ, the overseas exchanges across Europe, all of those exchanges, almost 80% of all of those trades that happen on a daily basis are algorithmically driven by computers. So for several decades, algorithmic trading has been part of the landscape. It's just not been available to the Johns and Janes of the world, retail traders. It's just not been available. And if it has been available over the last 5 to 10 years, it's been scam Forex stuff that you wouldn't want to touch with a 10-foot pole. So we thought to ourselves, there has to be a way to bring quote unquote automation to the Janes and Joes of the world to give you guys the ability to compete with the institutions that use this almost exclusively.
Well, and it's about access and involvement.
Mhm.
If you think about most people's involvement in the markets, it's very limited because there's a huge mountain of learning curve, like education, that you have to do, and then it's very time consuming. And then when you do, if you commit yourself to that practice, then it's extremely emotional, and not in a good way, in a way, if you're not used to it, in a very chaotic way. So if you look at automation as a fix for those primary three hindrances or encumbrances to people being in the markets more and making more direct involvement for themselves with the markets, I think that's changing, and technology is going to continue to tear down those walls, as we've seen with crypto kind of being a huge impetus of that as well. We also have a question from Leonardo, not a question, but he says, traded with them for a short while, but their pricing data was inaccurate, so I got a bad taste. Leonardo, reach out to us. I don't even understand the comment, to be honest with you, because we don't have any pricing. We all of its data feeds from market providers. So whatever that issue was, we'd love to fix either something that we did or the misconception that you have, and talk through it with you. So let us know and reach out to us. But yeah.
Yeah, so we want people to have access to this. So the reason why we made it free is we want people to get their hands on this. We want people to understand the power of what it's like to set up parameters or to use the parameters that are part of the package that we give people when you do download our software. Use those packages and profit from them. See how they work. And it's there's no minimum. By the way, we often get, well, what's the minimum that you got to invest, or what's the minimum capital? with our crypto strategies, there's no minimum amount. Now you got to have money in your account for the the algos to be able to actually take trades, but you don't have to have 10,000, 20,000, $50,000 as a minimum to be able to make the software work. No minimum, so you have the opportunity to use software in a way that you probably never have before. I see that there's been a tax question.
Yeah, I'll tackle that. There's a couple of things. Obviously, we are not in control of
No.
the tax rate. I do think, if you look at kind of the tailwinds of the administration, I think crypto specifically is probably going to get some favorable tax legislation coming down the pike. Just my opinion. Don't quote me on that. Not a CPA. Don't offer tax advice. But I think that's probably a fair bet at this point. What you can do in the software is you can determine when or if it sells and how frequently it sells. That is the way you would control your tax burden. Is like, if you want to use the software to just accumulate and do it very intelligently over either short periods of time or very long periods of time, then you can do that. And obviously there is no tax implication until you sell it. If you want more cash returns, then you're going to be subject to short-term capital gains, no different than any type of day trading that you do. So there's no way around that. The good news is that TradeStation and Gemini are great brokerages. They have push-button tax reporting. It's seamless and easy and not a big deal. And says, I saw a comment says also Gemini, great exchange choice. They're, in our opinion, they handled the FTX debacle better than any other company and better than you could hope that a company could handle it. They are the only company, to my knowledge, that gave all of their customers that had any of their pledged Bitcoin or crypto, they gave them like kind distribution. So when they got everything settled, the dust cleared, they gave them everything that they had originally back in holdings. And I see some of the ones I heard, so headline this week was that some of the companies, I guess, are giving people back at $20,000 Bitcoin prices, which is obviously 20% of where we are today. So yeah, we couldn't say more about Tyler and Cameron and what they're doing over there and how they're trying to go about doing it the correct way. And they are based out of New York, which gives you the fact that they've managed to weather the headwinds of that regulatory environment and do it so well, I think that says a lot.
Yeah, another thing that we're going to show you here is that our algorithm, oftentimes when people hear about algorithms, they think an algorithm does one thing, right? It's fixed up and it's been tightened up by developers to do one thing that creates a binary outcome. That's not the case with our Bitcoin algorithm. If you go to the next slide, Alan,
it's user driven, and it points to this next question Brian has is, thanks for answering the text question. Is there a way to set a stop loss? You mentioned not selling when the price goes down. Not only is there a way to set a stop loss, but you can layer stop losses. You can create a triage of instances that say, if the price goes down by this much, sell this much. And at the same time, you can have another instance that says buy back in at this much. There's all sorts of flexibility, and we call them instances, or TradingView calls them alerts. And you can set multiple alerts, and when those alerts are triggered, the event takes place. So yes, you can layer stop losses, and you can have whatever percentage exit of your position attached to any of those stop loss thresholds, so that it's kind of a waterfall and helps you manage, your overall exit, and not just in one kind of lump sum, beat it with a sledgehammer, but you can start small and amp up to large exits if you hit, large downfalls, essentially. Or
so inside of our inside of our algorithm, you can be doing 5 things at once. You could set this instance, that instance, the arbitrage instance, accumulate instance, and you could also sell a selling instance. And all of those instances could have different percentages associated with them. All of those instances could have different dollar amounts associated with them. All of those instances can have different time frames associated with them. Effectively, now you have 5 algorithms in one, right? As far as what people understand about algorithms. So what I'm going to show you here now, this is about accumulation, right? So you're accumulating Bitcoin using an arbitrage type of strategy. But I want people to really hone in on, again, the blue and the pink arrows here, because I want to make it very, very clear that as a trader, no matter who you are, no matter who the quote unquote best traders across crypto have been, or the best traders in the world have been, you can't do this. Okay. You can't pull this off. Look at the trades, the blue arrow down on the 13th, okay, of January. That's literally the bottom of a candle when you've got a descending price, and it looks like, oh no, maybe we're really falling off a cliff here. We've crested back under 90 and we're at 89. So where are we going from here? The algorithm doesn't care about those thoughts I just talked about. They decided to enter. And then what happened?
It entered at the bottom of the down wick of the negative candle that dipped its toe below 90,000 in price. And it took that position because of the parameters told it to. And it didn't have emotion. It wasn't thinking, oh God, there could be a next red candle behind this that's huge. There could be. It knows what to do when that happens, but that's not what happened. What happened is the price bounced. And to Andrew's point, then you can see the magenta or the purple exit arrow. And so you're playing the volatility to your advantage, but you're not having to sit there and ride the emotion of doing it. And unfortunately, you can see the previous entry back like January, let's call it the 7th. It took a long position at the bottom of that big waterfall too, didn't it?
Mm-hmm.
And guess what? It didn't exit because the price kept going down, and there's no reason to. But you know when it did exit, it exited that 1, 2, 3, fourth the fourth arrow, which was when it eventually went up past it and met that parameter. So it's not going to exit if you buy and the price dips. It's not going to sit there worried like, oh man, I've made a mistake. No, it's just going to look at that as another buying opportunity.
Well, and to the point, right? So the highs on Bitcoin are right at 109. Anybody notice the pink candle literally at the tippy top of that wick with the 109? Who pulled that trade off? What trader that you know of pulled that trade off?
Well, it's not even that impressive that it did it at 108. I think the exit was at 107. So it was 2,000 off the top. But you look at the entry. Yeah. The entry was 102 and the low was 99 on that candle. So when you're talking about getting the meat of the candle, that's textbook. I mean, that's the 80% you're looking for.
And again, we want to reiterate, all of this is happening when you're having dinner with a business associate, somewhere in your city. All of this is happening while you're sleeping. All of this is happening when you're at soccer practice, for your 2 daughters. All of this is happening when you're not watching your phone, your computer, TradingView, or on crypto Twitter. All of this is happening without your involvement after parameters are set. So,
but here's the best part of in the past, in order for you for it to be hands off, you'd have to trust somebody else to be hands on.
Yeah.
You don't have to trust anybody. We don't have access to your brokerage accounts. We don't know what you're trading, what your instance is. We don't know anything. This is user-driven software that you control, you turn on, you turn off. You have absolute authority. We are just the software provider that love to educate people on how to use the software. So there is no trust factor. You can trade the software for a month. turn it off, withdraw all your money from Gemini's account, and then wait a month and put it back in and start it back again. It's there's the best part about this is that it's completely flexible. So you don't have to tie up your money for periods of time to essentially use it for your benefit. You get to come in and out of the markets at your rate, at your pace, to the ratio of your net worth and to your available cash that you desire. You could come in and just use our free software and use it to accumulate $10,000 of Bitcoin every year for as long as the software is available. And it would cost you nothing, and you'd be well on your way to being a
Yeah.
Bitcoiner.
Yeah. Again, beyond all of the points associated with the power of the algorithm and the automated way that it does its business, it's free. It's free for you to use. Go and get it because it's free. Let's go to the next slide because I think this is an important point. So oftentimes when we're having conversations with customers that are going to go in the concierge program version of the crypto portion of our algos, they'll get questions like, well, you know what, if I just buy and hold for the time periods that you've shown on these case studies, don't I come out with better results? And sometimes the answer is yes, sometimes the answer is no. The reality is if you buy and hold over the past 6 years, God bless you, because you rode 83% to the downside. And oh, by the way, you put $10,000 or $100,000 into Bitcoin in January of 2017, and you've held it until today. That's 1% of 1% of people. So we've built a product here that allows you to not be a hero and not be the world's greatest diamond-handed investor of all time, but to benefit when Bitcoin does what it is that it does. So here's a case study that shows if you got into Bitcoin in June 1st of 2021, kind of in the midst of the beginning of a bear market for Bitcoin. It popped back higher, and then 2022, it really took a hit. Everything with FTX, Celsius, Luna, all that stuff, crashed the markets in a
listen, if you got in June of 2021, you thought you were a genius for a really short period of time.
Yeah.
And the reason why you thought you were a genius because you bought on support of the previous pump, right? You can see that support back in 2021 where we took the pause on the way up to the peak.
Right.
And you bought on that bounce, and God bless you, it bounced like hell. It bounced and created a double top and actually broke the previous high. But you had to wait 4 years to get back to even as smart as you thought you were. And it's just there is no right time. You can be lucky, and if you want to just prove that you're lucky, then by all means try to pick what day the best day is and buy 100% of your allocation and put it in a cold storage wallet and bury it in your backyard and come revisit it 5 years from now. And you may find yourself going, man, I just rode basically to break even. Or you may find yourself saying, man, I was the smartest guy in the whole world, or anything in between. And the point is that nobody knows what the best time is. And the more you come to grips with that, the more you're going to feel confident in separating your purchases and doing a lot of purchases over a longer period of time at a smaller rate, which requires discipline and attention. But with automation, it requires neither one of those. And that's where the benefit really comes in, is you're taking advantage of natural laws that, if you understand mathematics, you understand that in order to eliminate volatility risk from an entry, you have to dollar cost average, or you have to you have to have multiple entry points, and the more the better. And so automation allows you to have that. And so just by doing that alone, you're getting an advantage over trying to do it manually. Because I don't know if you can see all the blue and the purple arrows on your screen, but man, it's a lot of activity over a long period of time. and it would require a ton of discipline to do that, and a
Well, it's
ton of
remarkable discipline, and the thing that has been, the talk of the Bitcoin community for probably the last, 6 to 9 months as Bitcoin has risen from, 25, 30, 40, and now all the way up to 100K is, all right, I've got a bunch of Bitcoin. What does it do for me other than sit here and be part of, the assets that I hold? How can I get yield on this? And the point that we're making about our arbitrage strategy, and we already showed that you're getting a 15 to 20% yield from a cash standpoint using the arbitrage portion of the strategy on an annualized basis, is you're not giving up control of your Bitcoin. You're not sending it to an entity and then they're telling you, because you've sent us this Bitcoin, that we are now custodying on your behalf. And we're going to give you a return. That's not happening. You're using your spot position in an arbitrage way with purchases and sells that generate a cash yield on an annualized basis. On top of that,
or that give you the cash to make those trades. So, for example, we do have customers that have large Bitcoin positions, and they've come to us and they said, you know what? Bitcoin has changed my life. I used to have just stack sats, and I live in a 1-bedroom apartment in a tree house, and I drive a 15-year-old vehicle. I want to cash out some. But I'm terrified. I don't know when to cash out. I don't know how to cash out. Well, you can set the parameters in this algorithm to make the first trade a sell only trade, so that you start to cash out in the same way that you would accumulate, in a very methodical, small chunk manner. So you don't have to risk picking the best day to cash out. It's just going to methodically get you to the place that you want to be. So, for example, if you're somebody that says, you know what, I have 10 Bitcoin, and I want to buy a house, and I need a down payment, and I need $100,000 by this date. Well, inside of the software, you could literally say, get me sold $100,000 worth of Bitcoin by this date, and set that schedule in place. That would be an instance. And it would sit there and not just blindly dump you out of your 100,000, but really methodically get you out in a way that you would need a professional trading desk to hire on your behalf to do it this way without automation. It's just again, there's no substitute for it. Once you've seen it, you become a believer.
Our language, we're careful about it, but at the same time, on the future side and our fiat-based algorithms, we often say, put a hedge fund in your pocket because they do great work. And then on the crypto side, this is like putting an OTC desk in your pocket. You would have to employ somebody at Jump or Wintermute or Gemini's OTC desk to do this for you. This is just an incredible amount of work. And oh, by the way, you somehow have to be really good at executing these trades at these different levels that produce the results that we've showed you. All of that is done in an automated way for you, instead of having to turn yourself into an OTC trade desk. I constantly hear the question, well, when should I sell my Bitcoin? Right? That sentence is presupposed by, I should sell all my Bitcoin at some point, or I think I'm going to ride this bull market out and then I'm going to sell my Bitcoin. That's the nature of this particular world that we live in, the world of Bitcoin, the world of crypto. We've lived in this world where it's like, I have a certain amount. When do I sell it? I want to avoid certain huge downturns. So the idea is you're going to have to sell all of it. That's not the case. With an institutional level tool like this, you literally can layer in the thinnest layers of, over a period of time, I want to sell 7% of my Bitcoin holding, but I want to do it carefully and quietly in a way that's managed.
Or I only want to do it on pump days, and you get to define what the pump is. If Bitcoin goes up by 9% on any given day, sell this little chunk of Bitcoin.
Or any given week. Any
or
given
any
week.
given week or any given month, and literally it's like a bobber sitting in the water just waiting for that fish, and you don't have to monitor it. It just sits there and does its thing, and it presents itself when the opportunity presents itself. It executes on that opportunity. And that is, you're going to see automation take over the retail markets over the next decade. We feel fortunate enough to be on the bleeding edge of it, but seeing is believing. And that's to answer the question again from earlier, why would we offer this software for free? Because seeing is believing. And it may not be for you, it may not be for everybody, but if it is for you, it's going to resonate with you very quickly, and you're going to be able to make a decision very quickly because it's going to strike something in you that is undeniable. It did with us. And we had been around the space for a long time, and I've tried lots of different algos,
Mhm.
and there's a common problem with pretty much all of the offerings. First problem, most of them are Forex, and you have to send your money to some broker that's overseas. It just doesn't make me feel that warm and fuzzy having somebody that I have no jurisdiction over holding all my money. So that was a big thing that we wanted to solve. Number two, if the algo is, quote, really, really good, it's good on the merits of the claims of how much money it makes you on these, one set of variables. It's not good on the merits of how much time it saves you, how much emotion it saves you. It's like this yeah, shiny lure that is trying to attract you. Well, I hate to tell you this, not every strategy works forever. You need flexibility in your strategy. You need it as a tool so you can do different jobs for it. One size does not fit every market, and so you need a robust tool that's flexible for people. And if you found somebody that claimed to have that, most every single time you couldn't get your hands on it. You had to give them your money, and you had to trust that the returns that you were, quote, getting were not a Ponzi scheme that were going on behind the curtain with new funds being raised. So we set out to solve all of those problems, whereby which we don't hold any money. We do not trade for anyone. You get to trade our software with your account that you set up with the broker dealer. We've got nothing to do with it. You don't have to trust us for it. You get to see the results of the tool that you're using, and then you get to actually withdraw those funds and use those funds so that that it's a real it's a real offering that you can trust and rely on. And with Gemini and TradeStation, the withdrawal process is exceptionally easy. And so, what our job is to show you how robust the feature set is and teach you how to use the tool so that you can get as excited about using it as we are.
Yeah, it's for us, foundationally, it was about, making sure that customers using our software, are liquid. They have access to their funds at all times, no matter what. And then at the same time, trusted partners, right? Gemini is a trusted partner. TradeStation is a trusted partner. TradingView is a trusted partner. And so, we've created products that people seem to really like, and we want people to have access to them. So we've made our Bitcoin algorithm, the arbitrage strategy, and other strategies free to you. So go get involved, see how it works, and then decide how you want to use it on a go forward basis.
And let me give you an example of something that has been brought up by one of the customers here recently. And but this is the stronger the community grows and the more people that are using the tool, the better outputs we all have, because we get to learn what settings for any given period of time are producing the most. And there was brought up on one of our podcasts we were on that there's a significant uptick every Monday morning because all of the trades that got stored up between Friday at 2 p.m. when the cutoff happens and over the entire weekend, get stored up and get lumped onto the market on Monday. So if you thought that was an edge, not saying that is an edge, but just hypothetically, if you had an edge where you felt like there was some timing to be taken advantage of, you could set a parameter that says conditionally, if on Monday the spike in price over the overnight is this percentage, between Friday and Monday it's this, then I want to enter a position, and then I want to liquidate that position if the conditions on Friday are met, and you get to determine what those conditions are. So in a very short period of time, with a simple notion of what a potential edge would be, you can get into the software, run a regression analysis or historical performance analysis on that notion. If it looks good historically, you can create that instance and set that into motion all within an hour's period of time. Like, it's incredibly powerful, and allows you to explore a lot of things that typically you just get put by the wayside because there's no way to actually execute them.
By the way, we will be announcing publicly 2 more crypto algorithms next week. And in the following month, we'll be announcing an additional 2 crypto algorithms. So beyond Bitcoin, we want to serve the entire crypto community and give people the ability to stack what it is that they want to stack, and to use our products to be able to affect change financially in their life.
Well, and it allows you then to make cross plays. So
Mhm, mhm.
if you think there's a lag in price between Solana and Bitcoin, for example, um, let's say you set a condition that says if Bitcoin pumps by this much, right? Then you could set a Solana indicator that pairs nicely with that, so that you can essentially have instances across multiple asset classes that are intended to work with one another, essentially, or to play off of each other.
So there's our website, archpublic.com. Take some time, go look around. We really, really enjoy what we do. You not only have the ability to get involved with the Bitcoin algorithm for free, but there's tons of videos and YouTube stuff that shows you how to handle things, as
It's
well
not
as.
open source Python, to answer the question. You would essentially sign up on our website, and it will give you onboarding instructions, but we will have to add you to the permissions list database that will then allow you through TradingView to load the software in and start to pull the historical data and use it.
Yeah,
So
it's a simple process. It's
yeah.
we've had hundreds of people sign up over the last few days since we've made it free, literally hundreds. And very, very simple process. The instructions are simple and easy, and it doesn't take very long at all to get onboarded and have the software doing what it is that you want it to do.
Yeah. And any of you that on board, we'd love feedback. Todd,
Yeah.
one of the guys in the general chat, he gave me some great feedback. I had a call with him this week, and again, we're building this because we understand the needs of the market,
Mhm.
because we are participants in the market. We've been around crypto for 10 plus years. Again, algorithms is not a foreign concept to most people that have been in crypto for a long time, but it's exceptionally foreign to most people. And so that's the mission here, is to get a product that makes it very easy to use, engage, and to multiply your efforts as a force multiplier of time, emotion, stress, attention, education, all of those things.
Yeah.
It can
Well,
alleviate.
something that needs to be said too is we're on the cusp of all trading beyond crypto going to 24/7.
Yeah.
There was just an announcement that Schwab is now doing 5 days a week, 24-hour trading, that they're going to do that. Schwab is massive, right? The New York Stock Exchange just opened a location. Greg Abbott, the governor of Texas, just announced New York Stock Exchange is opening a location in Texas. That's to compete with BlackRock and Citadel, which are going to open their own exchange in Texas. As most of you may or may not know, Larry Fink has designs on tokenizing everything that's tradable. And so the idea there is if it's tokenized, of course it's going to be 24/7.
Well, and
Whether it's
it's not lost on the fact that Larry Fink's company, BlackRock, owns more residential housing in the country than any other company. So if you wanted to onboard real estate as a real world asset onto a tokenized chain and trade it in terms of, mortgage swaps, it would be very, very
so
easy for him to be the market maker on that.
So the point is that you go to archpublic.com and you begin to familiarize yourself with algorithmic automated trading, because the fact of the matter is whether it's 2 years, 3 years, or 5 years, you're going to have to begin using this technology because everything will be 24/7. And unless you want to, I don't know how you would survive on 7 days a week, 24-hour trading. You can't. So if you want to sleep in the future and still be involved in markets, you have to become familiar with and get comfortable with algorithmic trading, and we're here to help you with that.
And there's some nuances that a lot of people don't even think about, but that we can kind of highlight for you. There's nuances as it relates to planning your tax events and knowing when you're going to be selling future positions, but there's a tremendous amount of ancillary consequences to trading 24/7 that allow you to start really taking control of your trading in a way that you've never done before. Again, seeing is believing, and once you start getting your hands around the technology, it starts opening up your mind to ways in which it can be used. But to Andrew's point, the markets are exhausting, and they're only going to get more exhausting. And there's going to be large opportunities associated with pricing discrepancies between markets that are open and markets that aren't open. And when you have automation working on your behalf, you're not having to monitor the individual pulse and heartbeat of every single condition that comes out. It's doing that for you, and it's taking advantage of it. So yeah, it's something that you're going to be doing whether you do it with us or not over the next decade. It's too
Yeah,
big to ignore.
we have customers that will come to us and place a certain amount of capital, and they say, well, you say that it's hands off and all that stuff, but my wife and I we're going to be in Italy, 5 months out of the year. Am I going to have to do anything? And again, that's the whole point of algorithmic automated trading, is that you're not going to have to log in and turn it on and turn it off. The algorithm, the robot, the whole point is that it's doing this for you with no emotions and committed to a particular outcome. So familiarize yourself with algorithms, with using them, the ease of use that it can be. Go to our site, get involved, archpublic.com, and ask questions.
And one more thing to add is this tool was built to help a certain group of people, a certain demographic. And it just so happens that we're offering it for free to the retail side of it. But what it's really geared to do is to help companies add Bitcoin to their balance sheet.
Yeah.
And so it's an institutional grade tool. It's a very sophisticated tool that I think you cannot, once you see it, you can't deny the value in it. But companies have a desire to onboard Bitcoin onto their balance sheet, especially now that the new banking rules allow them to classify it as a risk off asset instead of a risk on asset. And there's a lot that goes into that. If you're on the board of a company or you're the owner of a company, number one, you don't want liability, increase the liability around when you buy it, how much you buy it, who buys it, who's in charge of how you buy it. Do you buy the ETFs? Do you buy the cold storage? Who custodies it? There's all these complex, issues. This makes it really simple. You can literally plan your purchases. You can get a purchasing schedule that you can print out. You can put it in the company file, put it in front of the board for vote. Everybody can agree to it. Then you can set that strategy in motion and have no human being be responsible for its execution. And so you're going to end up at the finish line that you set to end up at. So if you're a company that says, you know what, I want to add Bitcoin to my balance sheet because it's a differentiator, because I believe it's going to be top line, because I'm sitting on a lot of cash, whatever those reasons are, and you come up with, I want to put 5% allocation, 3%, 1%, whatever it is, you're going to be able to create a schedule and know when the end date of that schedule is, and absolutely know that something's being managed very actively through that end date to end up to get you where you want to be. And there's just a tremendous need for that in the market. I don't think companies have a lot of confidence in how they get into this, and so this tool is really meant to build confidence in people.
All right, we've talked long enough.
Yeah.
And we appreciate everybody that spent time being here. There's a lot of people that were interested in this. So reach out to us, whether it's reaching out to me on Twitter, Tillman on Twitter, or as it relates to our website. Feel free to reach out. We love to be involved with people and customers, and happy to help people learn what it is that not only we're doing, but the markets at large are moving towards. And so we wanted to give people something for free that they can learn with and benefit from in a really, really serious way. And that's what we're here to do. So thanks for your time. And that's all.
See you guys.